Now, just over 300,000 has been claimed by consumers under the Stay and Spend tax credit initiative, despite the government setting aside €250 million for the scheme. We're joined by Jed Nash, Labour TD for Loud. Jed, you've uncovered these figures, very, very low uptake of the scheme. I suppose events changed since the government brought it in, and none of us have been able to go out, really, is the problem, isn't it?
Well, absolutely. Remember those days when we could, and hopefully we'll get back to that point at some point over the next few months when we can get to grips with the virus and when it's safe to go back out and eat and support our hospitality sector. Yeah, I don't think anybody, Shane, would be surprised at the very low take-up of the scheme. Only 300,000 was paid out on about 4,500 receipts. Covering last year. Now, some receipts have been uploaded since, probably over the Christmas period, and I've no difficulty with government honouring that. But as you rightly point out, €250 million was actually allocated to that scheme to try to help the hospitality sector through a very, very difficult time. But I said at the time that demand was going to be low because the sector itself didn't have a demand problem. There wasn't a consumer demand issue. The problem that the hospitality sector had was one of confidence and a public health issue around the pandemic. So that was very clear. So I wouldn't expect that an awful lot more will be drawn down, maybe another few million over the next few months if hospitality gets to reopen to any level over the next period of time. So essentially what I'm saying is this, that a better way actually of stimulating the economy would be to waive the tax bills that 420,000 workers who were on the temporary wage subsidy scheme received last week. Most of those workers would owe under about €600-700. It's a relatively small amount of money, but it would achieve the same thing that the Stay and Spend scheme is designed to do, and that was to stimulate local economies. So rather than that money going back to the revenue commissioners, the best thing to do would be to stimulate local economies by putting that money back into the pockets of those who are on the wage subsidy scheme.
It's a seductive proposal, but would it actually benefit the economy, or would it just go into people's savings account? We know people are saving more. I feel a little bit antsy about the idea of people being excused paying tax. We all have to pay our tax.
Absolutely, and people were clear from the get-go, and the legislation is very clear that tax would be owed on this, but fundamentally what this was subsidy to the employer, not directly to the staff member themselves. Most of those who are actually on the TWSS would be in the low and middle income bracket. They would be working in the sectors that were most adversely affected by the pandemic, and actually have seen their hours reduced in some cases and didn't receive top-ups either. Now, we've got a bit of a two-tier economic situation at the moment, as you'll know, Shane. If you're working for a multinational or working from home, you're probably doing okay.
Yeah.
You're one of those people who've managed to add to your bank account about €12 billion in additional savings has appeared in bank accounts over the last few months. So when that money is released, hopefully when we get through this crisis that we're in at the moment, then that will act in itself as a stimulus for local economies across the country. But the reality is that those who have been on the TWSS are low and middle income earners who are likely to spend and not to save.